Hey guys, Hector Rodriguez here. In this video, I'm doing a trade breakdown on a trade that I took this past Friday on gold. Okay, so I'm going to show you right now on my Top Step Combine account, $354. That was right here on this day. And then you can see how much we're up on the account. We're almost to the point where we pass this challenge. And then write some more stats right here, but this is the big one right here, $354. Okay, and so we took that on Friday. So right off the bat, we're just looking at the higher time frames. Gold has been bullish for months. Okay, so right, higher time frames are bullish. So whenever we decide that we're going for a buy on any given day, this just is more confidence, more confluence that we're going to see price push to the upside. Okay, same thing if we go, okay, this is the hourly. Same thing if you go to the 4 hour, right? Price has been just bullish for months, right? So right, we're going to have that confidence. This is just confluence for price moving to the upside when we decide we are taking buys. Okay, so we execute, like I've mentioned in previous videos, in this shaded area, which is our kill zone. It's important that this is part of your strategy. What time of day are you trading? Is it London? Is it New York Stock Exchange? We trade New York Stock Exchange. Okay, we trade New York Stock Exchange. That's where we're looking for our setup, and that's when we're looking for our setup, and that's where we're looking to trade. Okay, we don't change anything. So as far as what time of day, we're not trading for hours. Okay, we're trading for anywhere, like I've mentioned before in previous trade breakdown videos, Eastern time, somewhere around 8 a.m. to 10 a.m., maybe 10:30 a.m. Okay, that's our range. If we don't see a setup within that time, we're done for the day. We're not even trading. We'll have better luck the next day, hopefully. Okay, so now that we've kind of seen that price is bullish on the higher time frames, we can go to the lower time frames and see if we're in confluence for a buy. Okay, so for a while, price was a little bearish for a few days. Okay, temporarily bearish for a few days, but then we saw this break. Right, we broke this channel to the upside right here. Okay, these previous levels of resistance that are sitting right here previously were being respected at resistance, and then price finally broke above. Okay, so that's confluence that we're seeing price move back up to the upside, and eventually reaching potentially these levels right here, like they did right here, and over here. Okay, so right, Friday was the day that we traded. We took our position right here, and I'll break that down here in a second. We took it right here, set our stop loss right here, and then we went for close to a 1 to 2. Okay, 1 to 2, somewhere around there. Price ended up going for 1 to 7. Obviously, every trader's different. That's up to you. If you want to go for a 1 to 3, some people do a 1 to 1, a 1 to 3, 1 to 4, 1 to 5, or they're taking partials at a 1 to 1 or 1 to 2, and then they're letting the rest of the position kind of go for potentially these 1 to 4s and 5s and 1 to 6 risk rewards. Okay, we personally, based on how we trade, our personal psychology, we like to shoot for that 1 and 2, and we like to just take that money if we can and run with it. Okay, so like I've mentioned in previous videos, like I've mentioned in previous trade breakdown videos, 3 things need to happen. Okay, 3 things need to happen before we take our setup. If all of these things don't happen, we don't take the setup. Okay, first thing is break of structure. Break of structure. In this case, we want to see break of structure to the upside because we took buys. Okay, the second thing, at that first push where price started to push to the upside, was a gap formed in the market, and I've mentioned what a gap is in previous trade breakdown videos. I'll go over it very quickly. Thirdly, we want price to come back, fill that gap, right? Respect that area, and then reject back out of that gap. We want price to reject away from there, and then we're taking our position. We're setting our stop losses below in this case because it's a buy. Okay, so let me break this down, right? We go to the smaller time frames, like I mentioned. Price broke these previous levels of resistance right here, and then eventually these previous levels of resistance that had broken these got broken to the upside. Okay, so this isn't a main criteria, but it's just more confluence, it's more confidence. And what is that? That's and I've mentioned this in other videos too, that is seeing price trade away from the moving averages. This yellow line and then this smaller line right here. This is the 13 moving average. This is the 13-day moving average, and this thick yellow line is the 200-day moving average. So if price is moving away from that, that's just more confidence to take the trade. Okay, doesn't necessarily always have to be that way. We do take trades where price is going towards the moving average or sometimes crossing it a little bit. But we ideally prefer for price to kind of respect these moving averages and then trade it away, okay? So first thing I mentioned, break of structure, right? So first this is our kill zone, okay? The shaded area, the beginning of the shaded area is that New York Stock Exchange kill zone from 8 a.m. to around 10:30 a.m. Eastern time that we trade. So we're looking for these key support levels, right? Price is kind of holding this level. It's not breaking these levels down here. These down here is right. It's respecting this 200 moving average, and it's continuing to just kind of break minor levels of structure to the upside, right? So price was consolidating right here, and then it broke above. Okay, came back down, respected this order block. Okay, respected this entire order block. This is just our thought process here. We're looking for buys, so right. We're going to the smaller time frame where we're trading at, where we're executing at, and kind of seeing if that buy bias still makes sense. Okay. So right, price respected this order block and then broke the main break of structure right here. Okay, this was the main break of structure. Okay, price of during London session, which is this black area, had touched these levels of resistance and it was struggling to break through. Okay, right, rejection are all throughout here. Rejection, broke structure to the downside, right, from these levels and these levels, came back up, rejected, broke more structure to the downside. But these are like minor breaks of structure. Okay, these are minor breaks of structure. When you're looking to short, right, a lot of people get tricked by this. They're like, oh, it broke structure to the downside, right here, broke this level, and then this level broke this level. Right, those are minor levels of structure. You want to see, if you're really trying to take a short, you want to see the major levels of structure, the major swing lows being broken, right? This whole order block right here, this little order block right here, right? Once price starts coming down and breaking these levels, then you will look for shorts, okay? But these minor breaks of structure, that's just price coming back and grabbing liquidity to go back to the upside. Okay, so our first break of structure, which broke these previous levels of resistance that were struggling, that price action was struggling to get past, were finally broken right here, right? This was the first push right here, okay? This was the first push to the upside. What do impatient traders do? What do greedy traders do? What do newbie traders do? I did this for years, dude, because I was impatient. So I'm not saying that. I'm saying this because everyone goes through this, right? Everyone goes through this. What do? They see price finally breaking these levels of resistance, and then they get in right there, okay? As you can see, the people that got in right here, price, like, right, look at these candles. They just started wicking up and down. They were looking messy. These people, right, market makers, the banks, price action is scaring these people out of, these small retail newbie traders out of their positions. They're taking losses. Right, they're buying on this big engulfing candle. They're like, oh, price is, right, engulfing back to the upside. It's pushing up, right? And then we see this huge bearish engulfing where the banks are basically selling off. All the small retail traders are selling off, losing money, okay? We see this huge bearish engulfing. Price comes back down, and then they're like, oh, they're freaking out. Then they start revenge trading. So, right, the patient trader, on the other hand, waits for price to come back. That's part of our criteria, and I'll go over that in a second. That's part of our criteria. They wait for price to come back to where the gap is. They want to see rejection at that gap and then set their buys and put their stop losses at certain levels. Okay, so I'm about to go over that right now. Okay, the first thing, break of structure. Okay, break of structure to the upside. We had this minor swing high broken right here. And then we had the major swing highs broken, right? These levels broken right here, okay? So that's the first thing, major push to the upside. Second thing, at that first major push, at that first level where price started pushing, was a gap formed in the market. The gap is formed right here. I'll go over it very quickly, okay? The gap is right here, this blue box, okay? where you think the gap is, that first push, the candle right, but wherever you think the gap is, the candle before the candle before that push, the top of that candle, which is this little one right here, the top of that candle, and then the third candle, wherever you think the gap is after the push, the bottom of that candle. All right, this is an imbalance in the market. This is the only thing that's 100% in the market, okay? And that is, price has to come back and fill these gaps, okay? It might be tomorrow, it might be in 30 minutes, it might be next week, right? Price will eventually come back and fill these gaps, all right? And so that's the first thing we're looking at. Break of structure right here, okay? Broke these previous levels. Was a gap formed? Secondly, was the gap formed? Yes, right here, okay? Like I mentioned before, this is pushing away from the 200 moving average, this yellow line, so that's more attractive for us and gives us a confidence boost, more confluence that price will push to the upside. Okay, we want to see price fill this gap, and we want to see it reject. Okay, once we see it rejecting, once I saw price basically fill this gap perfectly, look how it filled this gap completely perfectly, right? It doesn't always fill it perfectly, but look how it filled it, respected this whole order block right here. And then once I saw this candle pushing up about halfway through this previous bearish candle, then I got in, okay? I put my buys, and then I put my stop loss right there at this previous swing low, okay? Went for that 1 to 2. So that's it, okay? And how much you hold is all up to you. Some people like to go for that 1 to 1, which would be somewhere around here. That'd be the 1 to 1 right there. Some people will prefer that 1 to 2. That's what I prefer, right? Because losses are inevitable, right? There will be days where you lose, so you want your winners to be bigger than your losers, okay? And then, right, some traders, they're not taking any profits until they get that 1 to 3, and it did come to a 1 to 3, okay? So they're taking positions off right here. That's all up to you as a trader. That's just psychology right there. But once you have the strategy, you can kind of see what your psychology is going to be like once you have the winning setup. This is a winning setup, man. I've taken this strategy from some of the best traders in the industry. I've mentioned it in other videos. And this is just my style of trading. I like to be out within 15, 30 minutes, and that's it. If we lose, we lose. If we win, that's how quickly I want my money, in 15 to 30 minutes. And this happens 2 to 3 times a week. This setup happens in the markets with gold or with NAS. And the question is, are you going to be patient and wait for this to happen? All the criteria to be met. 1, break a structure. 2, is a gap formed. Price. 3, waiting for price to come fill that gap. Respect that level and then reject out of there, right? And then take your position and setting your stop losses and your target price. Okay, are you waiting for all those things to happen? Right. If those things don't happen, if all 3 of those things don't happen, if the gap doesn't form, if there's no gap, there could be a push in the market just like this. But if there's no gap, right? If this candle right here wicked down to this level right here, then there would be no gap because price I had already came down and right, took out these buyers, right? Took out liquidity in this area, right? If price did that, I would have even taken this right here because there was no gap. So everything has to be going on, okay? So that just depends on you as a trader. Are you going to be patient and really wait for everything to happen and then take the trade? That's up to you. But all of these things have to be met for me to take the trade, okay? And that's just part of the journey, right? Waking up, getting on the charts. Not every set of the criteria is met, and then you just have to literally just be like, right? What do they call it? Where you put your hands under your chair, right? You're like, or walk away, close the charts. Like the setup didn't happen, right? All the criteria wasn't met, so we're not trading today, right? It only took me a bunch of losses, a lot of L's, right? Losing a lot of money to finally be able to say, Hector, do you really want to do this? Do you really want to do this, or are you going to continue to break your rules? So that just depends on the trader, okay? I'm telling you, this works. Go back, test it yourself. The first thing you want to do is find that time in the market when you're going to trade. Are you going to trade London session, or are you going to trade New York Stock Exchange? All right, figure that out for yourself. We're not sitting here for hours, all day trading. Okay, so that's the first thing. Once you figure out what time of the day you're going to trade, based, everyone's got different work schedules. Then you're gonna look for you're gonna back test this setup or whatever your setup is during that time frame. Okay, you're gonna see how often it happens. How often does it actually does this setup occur throughout the week? What days does it occur? Okay, does it go for a 1 of 2? Does it go for a 1 of 3? Okay, and then once you have that, once you see that back testing, by back testing, then you start getting into these trades when they happen. Right, small amounts is important. Risk management is super important. Trade small amounts in the beginning. You want to trade only amounts that you're willing to lose, whether it's $50 or $100. That's up to you, right? That's up to the trader. And that's it, right? So before I end the video, I'll go over the criteria one more time. Break a structure to the upside, right? This level broke these previous levels of resistance. Break a structure, okay? At that first push right here, at the first push right here, is there a gap? This is the first push. Is there a gap? Yes, the gap is this blue box, okay? Like I mentioned, greedy traders will get in right here, then they get flushed out. Then they're gonna have a bad day. Trust me, I was the person buying right here in the past. I did it all the time, okay? It took a lot of L's for me to say, okay, are you really gonna like take this serious or what, dude? Okay, price needs to come back, fill that gap, reject that gap, and then set your stop losses. In this case, this is where I would set my stop loss. You can set it down here if you want. I set mine right there, okay, at the previous swing low. All right, and then that's it. Me personally, I'm going for the 1 and 2, and that's it right there. If you have any questions, comment down below. Subscribe. I really appreciate y'all watching. Trying to be transparent as much as I possibly can. This is my Top Step trading account. Hopefully we can pass this soon. I'll keep you guys updated with that. And making these videos also helps me personally as a trader, because it holds myself accountable, right? It takes a lot. It takes a lot to like do this and post it and then like, oh, screw it, I'm gonna break my rules. Like, no, bro, you went through the whole process of making the video, posting it, like being transparent, going over your criteria, the setup, and then what, you're just gonna wake up tomorrow, get on the charts, and just disregard all that. So it holds myself accountable as well. That's it. Good evening, guys. Have a good week. Take care.